Good afternoon, ladies and gentlemen. I hope you're not all too sleepy from having lunch, and I hope I can keep your attention. I am here to speak about Kuda. Some of you may or may not be aware of us. Let me go to the first slide. So, Kuda Tech was founded by Babs Ogunde and Muslim Mustafa in 2019. It's a UK-based holdco, and our first foray into Africa was in Nigeria, where we have a microfinance banking license. So what we've built, or what we hope we've built, is an app for Africans. No matter where you are in the world, you can access us. Okay, so we launched the beta app in 2019, and we've raised over 90 million from institutional investors. I think there's a gentleman at the back who raised a question earlier on about how traditional banks can compete with VC-funded entities. We at Kuda started with a growth strategy, but with the realities of the economy right now, we've had to pivot from growth to that of monetizing. We've been fortunate enough that in Nigeria, we've attained a critical mass of nearly 5 million customers, which we can now readily monetize. So as you can see on the slide, we've also now entered the UK. We've gone live with a remittance play for the diaspora to remit funds back home to those in Nigeria and ultimately Africa-wide. Now, what has helped us grow? Unfortunately, one of the most helpful factors to our growth was COVID. People could not readily access their banks due to the lockdown and restrictions, so they now needed to find alternative banking channels, and Kuda was there. Our timing could not have been better, unfortunately. We had, what's the exact number? Literally, we had thousands of people registering every day with Kuda during the lockdown process. So we achieved a huge onboarding, which was beyond anything we actually expected or hoped for due to COVID. Now, if we look at this, timing of COVID, timing of the people, Babs and Musti coming together at the right time to deliver what was needed for Africans locally and internationally. Additionally, these minds knew what the investors wanted to see from Africa, and how can I put this? Babs pitched beautifully to the investors and convinced them. At that point in time, there was an appetite for African fintechs, hence the amount that was raised in 2019. Over 490 million was realized by Africa fintechs in that year. Okay, so in terms of our audience, our customer base, as I mentioned earlier on, Africa is a very young continent, so we hire people who speak to that audience. We hire from the audience. We cannot, for example, we cannot market products for women without having women on board. So we've intentionally hired young people to speak to themselves ultimately. And that's one of the key success factors we've had in Kuda. We hire intentionally for our target audience. As we have here in terms of data, we are not, we don't behave in the same way as the commercial banks traditional banks, forgive me, where a lot of decisions are driven by emotions and human interaction. It's very much about data, which was talked about before. And the gentleman said, if the data you put in is bad, what you get out is bad. So again, we've been very careful in how we manage our data to ensure the decisions we make are well identified, well quantified, and well delivered in terms of our product offerings. Now, in terms of achieving our goals with the staff we have, I'm not sure if any other companies do it. We have OKRs. So we set clear objectives with clear timelines to deliver what we've promised. And we have regular check-ins with our staff, cross departments, to ensure we're meeting our targets. That for us is key. That transparency across board, those regular check-ins to make sure what we've promised to deliver, we're in line to do so. Now, consistency. We've had to be consistent in what we do to build trust. It's key. In the following slides, you'll see the importance of trust. But our stakeholders need to believe in us, to keep funding us, to do what we need to do. So if we're consistent and we deliver as promised, we get what we want from both the customers and the investors. So again, to go to the lessons we've learned, hopefully, like your lunch that you ate, it was a tasty lunch. And we've had tasty lessons. Lessons often are bittersweet and can leave a good taste or a bad taste. So this is a taste or tasty lessons we've learned from our experience at Kuda. So to start with the T, trust. Trust is key. Investors need to trust us to pull off a plan that rewards their investment. You cannot emphasize enough the level of input from our investors. They want to be sure that you've promised this, at this point in time, you've delivered it. So that trust is key. The regulators, which is my core area, again, the level of interaction needed and right now applied is not enough. We need greater interaction with the regulators for them to trust you, to understand you, and more importantly, to believe in you. Because if they don't believe in you, they'll frustrate you. So you've got to build that trust with the regulators, and equally with the customers. We are custodians of their money. They need to know that we are responsible people, responsible professionals. One of the key mistakes a lot of people tend to make with fintechs, we're not all just a bunch of coders. Our founder is a trained accountant that has audited the Central Bank of Nigeria. We have competent banking professionals, financial services experience in our company. So it's not just a bunch of coders typing away. No, we do understand banking as well. So we hopefully can convince our customers and our regulators and our investors, trust us, we know what we're doing. Additionally, in terms of personnel we hire, they need to trust the leadership, that the leadership knows what they're doing, why they're doing it, how they're doing it, and when they're doing it to achieve the right results. So the leadership has to build the trust of not just the customers, but the employees. If they don't trust you, they won't follow you, they won't deliver what you want. Again, agility was spoken earlier about our chairperson. That's a big advantage we have over the traditional financial institutions. We are not constrained by rolling out a product for multiple branches in multiple jurisdictions. We have product-focused people who say, this is what we want. Do we have the tech stack to deliver it? And with that, we deliver very quickly. We don't have to say, yeah, this branch has this access to this many people, that branch has that access to as many people, and deliver different strategies for each branch. It's a one-stack option. On our app, it's there, readily available, easily accessible, agile. Now, in terms of the skills, the S in Tasty, we have a dedicated team for talent acquisition to ensure we have the best people at all times. If we look at some companies that have reduced headcount reduction is not always because you've grown too quickly. It's realizing you need the best people. You reduce headcount, but you replace that headcount, ensuring you're recycling and always having the best talent on board to deliver your goals. tenacity. Now, for fintechs, we have many challenges. The regulators, by default, don't trust fintech because they don't understand fintech. And more often than not, they fear what they don't know. So they make your movement constrained. For lack of a better word, with a husband and wife, they call the wife the ball and chain, the one holding you back in terms of the male. The regulator, we're married to them. That's our ball and chain. But we need to change that relationship from a ball and chain to a partnership. The regulators need to understand that we do know what we're doing. I can't emphasize that enough. We're not here to cause problems. Yes, we're changing how things work. To give a prime example, my background, I was in derivatives. Back then, the regulators were not aware of the products and they were playing catch up, which caused a mess in financial services. We all know what happened to Lehman Bank and some other banks as well. But now, the approach needs to be a partnership, not one being held back or one trying to play catch up. We need to have, for lack of a better word, an information sandbox, not just a digital sandbox. It's what you want to do, why do you want to do it, what are the benefits to the people, what are the benefits ultimately to the country as well. So we need a regulatory sandbox, not just a digital sandbox, but to discuss products, both in country, out of country, exchange control issues basically. That's what I'm speaking to there. So in terms of the skills, again, I spoke about data a moment ago. AI. AI is wonderful. It works well, but only works well based on the quality of data that you have. And right now with Africa, due to the lack of data or accurate data, AI cannot account for the African factor or the human factor, if you prefer. So we're still perfecting, as the gentleman in front here asked about the credit bureaus. Those are things that we need to improve upon cross-border, not just in one country, but consistently. We need to do more in terms of our trading blocks. The trading blocks have great potential that can be harnessed, but as yet, they've not been harnessed. There's so much more that can be done with each trade. ECOWAS, for example, Mr. Osahon is not here. EcoBank was created because of a trading block, but till date, that trading block has not harnessed its potential. So we need to make sure we share data. We don't hold and hoard data. By sharing, we'll achieve scale very, very quickly. Okay, again, I spoke about this already, the regulators. It's not an easy one. They just really need to spend time with the fintechs and the commercial banks. The commercial banks, I've noted certain behavioral patterns because they've not understood the potential of working with the fintechs. They tend to have, for lack of a better word, back-channel conversations with the regulators, which is counterintuitive and counterproductive to the growth of financial services and financial inclusions. They fear the fintechs, so they speak against the fintechs, which helps nobody ultimately. And the Y in tasty. This Y could be an A. Why is that? Youthfulness. It's Africa. Africa is about the youth. The future of Africa is the youth. Again, if the culture of Africa is the old know best, and the young should listen and only speak when they're spoken to. Unfortunately, times have changed. We've got to engage better with the youth. We've got to listen better to the youth. The success of Kuda is that understanding. We listen to the youth. We don't say stay silent. We ask, what do you want? We welcome the youth. We welcome the engagement with the youth. You don't go from a bank with 0 customers to nearly 5 million in 3 years without engaging and knowing your audience. That is one of the things we do well at Kuda. We've done it in Nigeria, we're doing it in the UK, and very soon we hope to be in various other countries We're looking now at Uganda, Tanzania, and Ghana. And believe it or not, we actually do have an office in Cape Town as well. We actually want a pan-African entity. We registered in Cape Town to look for tech resources. Again, the way I'm dressed intentionally this way. It's an African-focused entity. We want African resources to build Africa because we're building for Africans, young Africans. So please, those of you who are here, as much as possible, try and learn from Kuda. Engage Africa, engage the youth, empower the youth, both male and female, but ultimately empower and listen and encourage the youth. Employ them, train them, educate them. So yeah, for me, that's what I came here to say. Empower Africa, empower the youth. Thank you. Any questions? Because there was one gentleman earlier on, but he's gone now. He was speaking about Kuda before. But if there's anybody else that has any questions, I am more than welcome to answer them. Or are we all tired from lunch?
In an extremely competitive market like Nigeria, and I'm sure there are other apps, other platforms that compete with you, what has been the differentiator that you guys managed to have, the practical differentiator to get to the 5 million users?
That's very simple. In terms of the financial landscape, the fintech landscape in Nigeria, by no means was Kuda the first, but we listened and we learned quickly. We listened to the right people in the right way. There's nothing else. We're not doing anything fantastic, but we're doing it well. What we're doing it well. Nothing more than that. There's no special magic, there's no special sauce. It's just we listen to our customers and we deliver what they want. We don't give them what they think they want, we give them what they tell us they want. And that's our success.
Hi. Good presentation. I was wondering, what do you think it's the main lesson that the main factor that you guys could learn from the commercial banks that could really change your way of working or improve your way of working, that could really make a difference for the customers?
Okay. Again, thank you for that question. And the answer, you know the answer. That's why you asked the question. It relates to your job. In terms of risk control and risk appetite, we need to understand from the commercial banks or traditional banks that yes, you may want to do this, but does it make sense? You have an agenda. Is it in line with what the regulators expect? And also, is it fair to the incumbents? When I say fair, the marketplace is open to anybody and it's free competition. But ultimately, if you're coming in as a fintech without the right licensing and not following regulations, it's not fair. As a risk person, you know your guys will come to you, we want to do this, we want to do that, and you'll say no. A fintech comes in with no licenses and starts doing all those things you said no to, it's a problem. You guys then go to the regulators and say, regulator, look at this company, what's going on? Why can they do this? So ultimately, we've got to learn to play fair. We've got to learn to play by the rules. Or better still, partner with you to enable better rules. Work with you to challenge the rules that are there and get the rules improved. For me, that's it. We sit with commercial and traditional banks and say, how can we work together to improve regulation, to enable this ecosystem to work for everybody? We're good? Okay, thank you.